What is up, guys? I'm going to be going over the setups that I trade, my setups. Now, these setups work in both bear and bull markets. I've gone ahead and I've added 3 additional setups to hopefully help you capitalize in rough and volatile markets. All right, these setups I've been trading throughout this year, and I've found the highest expectancies with. Now, I want to go over some basic rules when it comes to finding setups. Now, at the end of the day, I am a pattern trader. Now, I'm trying to identify patterns within charts. Now, I do all my work on the 4-hour time frame. Patterns always trump moving averages. Now, moving averages are used to find setups. So to understand what a setup is understanding that a moving average, or the 3 moving averages that I use, the 50-day SMA, the 15-day EMA, and the 180-day SMA, must all react on a chart a certain way. Now, when I say react, if you're looking at a chart and you can see that candlesticks are not respecting certain moving averages, okay, whether it's the 180-day, the 50-day, or the 15-day, and I like to use this word respect, and what it means is that these levels are not acting as either a support or a resistance level. You can see on a chart, if the candlesticks are clearly going through these moving averages, and the chart is a very volatile, choppy chart, okay, and candlesticks are going up and down through these averages without bouncing off of them, then it means that the chart is not respecting those moving averages. And at the end of the day, if the moving averages aren't respected on a chart, then the setup in the first place isn't going to be valid, okay? So the biggest thing when it comes to finding a good chart to trade is we want to find clean and clear charts, all right, where direction is very clear, where moving averages are respected, and then that is going to help us find a setup that is going to have the highest expectancy, or a chart that is going to present the best opportunity when it comes to finding a setup using those moving averages. So if a chart is choppy and it's showing no attention to moving averages, then we have to assume that the setup, which is based off of the moving averages, is not going to be valid. Okay, just restating what I said before. In other words, the 180-day SMA isn't going to matter on a chart where the 180-day SMA is neither acting as a support or resistance. And I'll make sure to give you some examples here shortly. It's important to note that there are exceptions to every rule, but generally we want to stick to what I just talked about, finding clean, clear charts where moving averages are respected, and then finding a pattern, knowing that the pattern is going to trump the moving averages. But when you can find a good pattern with a chart that has respected the moving averages and then find a setup based on those moving averages, that is going to give you the highest expectancy when it comes to taking a trade. Now, you can also take a trade based off a chart pattern, not a setup. Because when I say setup, a setup is based off a moving average, but sometimes the chart is going to present a very clear pattern where you don't need to find a quote-unquote setup using moving averages, where the pattern is going to give you enough information to be able to play the chart. Now, in that scenario, you can use moving averages to manage the trade according to how much they are respected within the chart. And don't worry, I will give you an example of what I just talked about, but kind of spewing information out there. Make sure you're taking notes, because this is a lot to kind of take in and understand. So there's 2 ways you can take a trade, or 2 ways I take a trade. You can take a trade based on the chart pattern using moving averages to manage the trade. That's number 1. Or you can take a trade based off the moving averages. Now, to take a trade based off the moving averages, which is a setup, means that the moving averages must be respected on the chart. You have to clearly be able to see that they're acting as either a support or resistance, and that candles aren't trading within or through or on these moving averages as if they weren't there. Now, it's important to note that you can indeed take a trade on a chart where moving averages aren't respected, but the pattern must be strong enough to validate taking the trade in the first place. Now, you can use what I like to call candlestick support and resistance levels to manage the trade. Now, that's if the moving averages have no effect on the chart, but the pattern looks great, but you can't use any of the 3 moving averages to manage your trade because, well, they have no effect on the chart. So instead, what you can do is look for support and resistance levels within the chart. okay, within candlesticks, where a candle has been rejected off a certain level, that's resistance. Basic support and resistance levels, right? So nothing too complicated. Now, kind of going on to a side topic here, this is a lesson that I've learned over the last 6 months so far this year trading that I really wanted to make sure I got in this masterclass somewhere, because this is super important. And I remember I briefly mentioned it when I created this class. Obviously, I'm filming this video after creation because there's always stuff we're learning as traders. It's our job to continue developing a greater understanding of the overall market. And, you know, the market changes. We can't be stagnant. We can't do the same thing year after year without continuing to learn more, develop our strategies, okay? So, adding a couple things. Now, this is important. I'm going to pull up a chart. But sometimes by waiting for confirmation, you will miss out on a good trade, okay? Now, I'm just going to go over Apple real quickly for an example before we move on to the setups that I like to trade, all right? This is important. I need to get this little bit in here for you guys to understand. So I'm going to use Apple. I played Apple earlier this year inside the mentorship group. Now, this is an example of why in some cases you don't want to wait for confirmation, because by the time you get confirmation, you've already missed out on the entire move itself. Now, everyone's waiting for confirmation. Everyone's looking at the same chart, the same moving averages. I talked about this earlier, so it's important that you are within the percentage of people, the small percentage who are ahead of the curve. Now, by waiting for confirmation, you're waiting for, you know, everything to align, your indicators to align, whatever. And you don't want to do that, essentially, and I'll show you why. So Apple, sorry that the resolution's bad. This was a screenshot. I can try to crop in a bit here. But you can see Apple, okay? We started running up toward that high at 183.38. Now, what I could have done, and what most people probably were waiting to do, was wait for a test of this resistance level, okay? Because we broke out of 177.14, right? Broke through resistance, and now there's no resistance up until 183.38. Now, most people are going to be waiting for a rejection off of 183.38 because price is either going to break through this level and continue running to a new all-time high, or it's going to get rejected and then pull back down. So instead of waiting for confirmation, right, confirmation of a rejection off this level to buy puts and play the move back down, I entered before the test of this level even occurred. Okay, at the time of this screenshot is when I entered. Now, I knew that my max pain on this trade, my max loss, was sitting at that resistance level. So if we did break through 183.38, I would be cutting the trade for a loss. Now, that was 2.60% above where we were currently trading. So doing my calculations, looking at my risk to reward, this trade was worth taking. Okay, you always want to make sure that the trade's worth taking based off your strike rate, based off your risk to reward. So I entered this trade, got in, didn't wait for any confirmation, right? And then walked away with 38% profit. So just an example that in some cases, some scenarios, using your best judgment, right? At the end of the day, we can only make decisions based off of what we know, and no one knows everything. There's literally no one that can predict what's going to happen. But knowing that most people out there are going to be waiting for confirmation, whether it is an indicator, moving average, a bounce off resistance, a breakout, or whatever it is. We know that most people are waiting for a rejection off resistance, or they're looking to see a breakthrough resistance and then maybe play the breakout. All right, I'm going to give you an example, like I said I would, of a trade I took based off of the chart and not the moving average. You can see moving averages within this chart are not being respected, maybe a bit here, but generally overall, you can't take a trade based off that. There's no setup I could see based off the moving average. So the only thing I can see within this chart is a very clear pattern of pushes with pullbacks, pushes with pullbacks. Okay, higher highs, right? Direction, overall direction had shifted since we broke above this level right here after making that low at 31.10. Okay, and then we continued to make higher highs all the way up to this resistance we formed at 52.72 back here on that push, right? So we're getting rejected off of resistance, and I was just looking to play the move back down. Judging by the overall pattern, again, I was just looking to play that next move to the downside. We could use the 180-day SMA potentially as a level of support to pull back down to, since you can see the last couple pushes have resulted in a pullback to that level. The 50-day SMA not really acting as anything, okay, not being respected within the chart. So we can look to capitalize on a smaller pullback just based on the overall pattern. We could use the moving average to, manage the trade. But at the end of the day, we're not taking this trade based off a moving average. And I walked away from that trade with a 5.56% margin for profit. So nothing crazy, but a trade that I took solely based off the pattern where moving averages weren't going to help me much. All right, that is going to conclude this lesson. Let's move on to the next one, where I'm going to be talking about how to identify setups and going over the setups that I trade, in addition to the 3 new setups that I just added. I did want to quickly interrupt this video to mention that I do have seats still open inside my mentorship. If you guys are interested, I will put a link in the description below. Now, what you'll have access to is the ability to follow along and copy my trades. I'll send you my entries, I'll send you my exits. Well, at the same time, every day, I'm going to be on a live video call. I'm going to be sharing my screen, and I'm going to be walking you through the trades that I take from entry to exit. So you'll not only be able to follow along and copy myself if you so desire, but you'll also be able to learn what I'm doing in this current market to continue finding success. Again, the link will be in the description below. Okay, so this next setup, I don't have a great name for it, okay? But what we're essentially doing is we're trying to find a chart with a clear low, a chart that's pulled back and is about at that low. Okay, we're looking to play the bounce off this low back up to another level of resistance. So we could call it like the bounce off low, or the support, low slash support. And then again, this is all done on the 4-hour time frame. And I say low before support because this doesn't work off just a basic support level. This works on a low on the 4-hour time frame, okay? Because there's 2 things that are going to happen. We're either going to break down below this low and form a new low, or we're going to catch a bounce. So it gives you the opportunity, in this case, to wait for confirmation. Waiting for confirmation in this case is good because, yes, you might miss out on a little percentage on the entry, but I always say never sweat the entries. I've never made any money sweating the entry. So on SMH, you can see I opened up a position. This was back in April, okay? And you can see SMH had been making lower highs since forming that all-time high at 319.36. Okay, so very clear lower highs. We want to look for lower highs, of course. That's part of our bearish strategy, okay? Bear markets, where most charts are going to be going from the top left to bottom right, where the overall trend is bearish. And we're looking for a pattern of lower highs. Okay, there's the same stuff that I'm kind of repeating, but it's important to hear it a couple times. Now, I don't want to seem like I'm contradicting myself, okay? We always have to be aware of how strong of a support or resistance the 180-day SMA, 50-day SMA, or 15-day EMA will be. Now, depending on the chart, depending on how respected it is, it's either going to act as a stronger support or resistance, or a weak support or resistance. Now on this chart, it looks like it's going to be acting as a weak support, or in this case, the 50-day SMA is going to be acting as a weak resistance. However, it is still a moving average, which will be acting as resistance. All right, so you can see I was looking at the overall pattern, and I was looking to play a move back up to the 50-day SMA, knowing that it would be acting as a level that I can use to manage this trade. However, not a strong level of resistance based on the chart. Okay, and if we do see a break above this level, the 50-day, I'll be keeping an eye on that next resistance overhead, which is the 180-day SMA, very close overhead. And again, it is not going to be a very strong level of resistance. However, it is a way in which you can go about managing your trade. Okay, so it's a very straightforward concept where you're trying to find a chart that isn't necessarily oversold, but a chart where a low has been formed, where you're either going to break that low or catch a bounce off of it. If you catch a bounce off of it, play the move back up to a resistance level. Now, there's no great resistance level on this chart because moving averages haven't been respected well, and there's no clear resistance levels within the chart itself based off candlesticks. But like I said, you cannot check every box when it comes to the criteria for your setups. I'm going to make sure to show at least 2 more examples though. So we can see that different charts, again, present different opportunity. They all have a different story. They all will check different boxes. And then it's up to you to decide if the risk is worth taking the trade or not. Now, I don't mean risk as in risk to reward. I mean risk as if you can clearly see that these moving averages, which you're going to use to form your trade plan, are not strong levels of resistance in this case, well, then you're taking on more uncertainty due to the fact that it has not been confirmed in the past that it will be acting as that resistance in the future. I'm just going to show you guys another chart for a different example. Let's go to DOCS. So you can see DOCS had just experienced a very large pullback the day this screenshot was taken and the day before. Big red candle right there. Currently, just catching a bounce off that low. All right, our support level formed at 39.92. So what I did was, well, I entered, all right? I bought some calls. As you can see, I bought the DOCS $40 call, and I was looking to play a bounce off this support. Okay, I set my stop a few cents below support. Now I entered. This could be an early entry. Like I said, I don't sweat the entry. I set my stops, and if we broke below that level, then I'd get stopped out, and that's all right. Keeping my loss to a minimum. Ended up catching a bounce perfectly off that level. Again, I wish I had a screenshot to show you, which is something I will start doing from now on, but I closed that trade for 40% profit. I'm glad that I'm not only showing you examples on live charts, but I'm showing you previous trades I have taken to ultimately show you that what I'm teaching you actually works and that I, myself, have been able to find success trading these setups this year inside the mentorship. Okay, another one I'm going to show you. There's another previous trade on CMCSA. I believe this was, yeah, here it is. February, end of February, CMCSA. Here we go, okay? Very clear chart here. You can see that low formed at 44.80. I said just formed a new low at 44.80 on the 4 hours, sitting in oversold territory. This chart was oversold. No clear resistance beneath. Okay, so keeping my stops tight just below support, okay? So obviously, that low is support. If I entered right there, there was a little green candle being formed, if you can see right there on the 4 hour. Wish I had zoomed in a bit more. But set my stop slightly below there. Again, keeping my losses small if I was wrong, if we didn't catch a bounce off that low. Okay, and I was looking at the pattern, lower highs, yet each time a lower high is formed, price has seen a nice recovery. So yeah, lower highs, yet each time a lower high is formed, price has seen a nice recovery and a push back up to the 180-day SMA. Boom, boom, boom. Looking at the pattern, very clear there. Sitting down about 10% from that level. Okay, 10% down from the 180-day SMA. I was just looking to play the bounce back up to the 180-day SMA. Straightforward play, close out for 31% profit. So that is the bounce off the low or the support level. So looking at charts that are bearish, where there was a recent low formed and where price is currently pulling back. Okay, so recent low. So again, you're looking for a chart where overall direction is bearish. It's oversold. You're looking for a low formed recently. And candles could either be trading right at that low currently, or you could see like a week or two previous, the low had been formed and candlesticks are now trading back down toward that low, or about to bounce off of it. So again, every chart's different. Every chart tells its own story. And again, it's important to keep your stops tight with this setup. Keep your stops right below that low. Don't worry about the entry. If you're early, that's fine. But if you are wrong and price does break below that low after you enter and create a new low, then you'll get stopped out and you're not going to lose a lot of money. Okay, so you can wait for confirmation if you want. You can wait for that bounce, or you can enter and set your stops low. Either way, set your stops right below that low, wherever it was formed, okay? All right, that's going to conclude this setup of, playing a bearish chart, playing that bounce off the low. Again, there's a setup you're going to find when the overall market is pulling back. However, we're buying calls, of course, okay? So again, with all these setups providing plenty of opportunity, whether the market's going up or down, for you to play either direction and make money either way. All right, let's go on to the next lesson. All right, we're going to be going over the next setup. All right, there's a new setup that I'm adding because I've been trading it a lot this year, and I like to call it an overbought / overextended pullback. Okay, now CHR is not the right chart to use for this. So let me pull up XME. Now, this is a previous trade that I took inside the mentorship group. I was charting this thing way back. I believe this was back in January. I'm actually going to pull up the mentorship, and we'll go back to that trade because it's a good example of an overbought, overextended pullback where we're looking to capitalize on a very, as I said, overbought chart. Now, it's often hard to call the top, so you got to be aware that charts can keep running and continue running, so you really want to keep your stops tight if you're going to try to trade this setup. Now, the same principles apply as mentioned in the previous setups and in the first video where I go over just some basic rules when it comes to trading patterns within trends and finding setups based on moving averages. So this is XME, all right? XME was looking super overbought on all time frames. Now, generally, if you throw some stupid indicator on a chart like RSI, you can see it's overbought. Now, a lot of beginners start out with the RSI, but as you learn more and trade more and become more experienced, you don't need the RSI because you can look at a chart like this and see visually that it's overbought. And it's important to note that a chart that is overbought can continue becoming overbought. And so the RSI at the end of the day is pretty ineffective in the sense that if the chart is sitting in overbought territory, well, it could continue pushing. The RSI is not going to keep it from pushing if the RSI is overbought. But I'm looking for a chart like XME that potentially has just made a new all-time high. Now, if the chart has made a new all-time high, the chances are that a retracement is due. Why is that? Well, that is because everyone is going to sell their position to lock in profit. Whoever was part of the rally, part of this 15 or whatever it was % move, over a week or a week and a half is going to lock in profit. Okay, therefore, dumping the price. So it's general basic market knowledge paired with just finding the right chart that presents the right opportunity. And now this strategy is going to be a put strategy, but it's not a bearish strategy because the market is not in a downtrend. When we're finding charts that are overbought, it means they're going from the bottom left to top right. So you'll be able to find more charts that look like this in a bull market. However, we are buying puts because we're betting on the price to go down because it's an overextended chart. Now, another downside to this setup is that, well, you can see there's no moving average or, resistance level overhead that we can use to go about managing the trade, figuring out where we're going to put our stop, where we're going to put our take profit. You can even see on this chart, none of the moving averages are respected. So when it comes to trading overbought or extended charts and capitalizing on a pullback, it is probably one of the riskiest setups, but with one of the highest rewards, okay? More risk equals more reward. We all know that, but know that the expectancy for this setup is not as high. Now, with that said, it is still, a setup that presents itself less often than the others, but there is good money to be made if you do find a chart like XME that is sitting in extremely overbought levels. Let's see, we made 14%. And here's another example, all right, FSLR. Now, I got in too early on this one. I tried to play this, kept getting squeezed up. I don't know if squeeze is the right term because it wasn't a short squeeze, but price continued to rally, right? We broke through that high, the all-time high on the 4-hour, and we continued to push until that new high was formed at 121.91. On charts like this, I'm going to give you two examples. I'm going to show you Apple, I'm going to show you FSLR, because this is essentially one and the same. It's an overextended, overbought chart where we're looking to capitalize on the pullback, but this FSLR and FSLY specifically, we can use our moving averages to help us actually make a trade without going in so blindly, without as many, not indicators as in chart indicators, but indicators as in using our rules and our checklist and not being able to check all those boxes. So you can see right now, okay, 15-day EMA has been acting as a support level on our way up, okay? Previous to this rally, it was just very chop within the candlesticks and was not respected. Now, on a nice rally. This is where the 15-day EMA comes in handy because you can use it as an indicator or indication of a reversal. You can see we started breaking below the 15-day EMA and started to top out here. Ended up breaking below completely. And at this point, you can see the 50-day SMA has almost caught up and has almost crossed the 15-day EMA. So now we can look at the 50-day SMA as a support level. You can see it has not been respected previously, but on our way up, it was able to make some distance between the 15-day and itself. Because you can see right here, look how close these two moving averages were trading to each other. At this point on the chart, we're still sitting very overbought. We're looking at roughly a 20 to 22% margin for profit, back down to the 180-day SMA, okay, which we can see has not been respected either. So that's a tough thing. When you look at overbought charts, and you could see a very choppy chart previous to the rally where moving averages were not respected, then you know right away that we cannot use this level to gauge whether it is going to act as a level of support or not. Now, the way I'd look to play this chart is, give it a couple more days, see if we start trading clearly below that 15-day EMA. And then not saying that the 50-day SMA is going to act as a support level, but if we're trading below the 50-day SMA, that means that direction is overall more than likely turning around. Okay, direction has shifted. We've lost our volume. We've lost our momentum. And it's time to get in with a put. Okay, so this is, again, not a strategy you're going to play with a bear market. It's a strategy that more than likely you're going to play during a bull market, but you are buying puts because we're betting on the price to go down. Direction shifts. It's overbought. Now let's check out Apple. And again, it's hard to find a chart that checks all of our boxes. Okay, it's very hard. So you have to be picky, but you can't be too picky. Now with Apple, you can see we formed that low at 129.04. Since then, have been rallying. Now, Apple, I was waiting for a break below the 50-day SMA. You can see the 50-day SMA 1, 2, 3, and I would say 3 times has been validated as a strong support level. The 15-day EMA isn't giving us much here, so I was waiting for a break below the 50-day SMA now, and this is a trade I may enter today. But I can see based on our support levels within the chart, I could play the move back down to 162.78, maybe even 159, maybe back down to the 180-day if it has been respected on the chart, which it has not. So I'm going to be just looking at playing down to the next support levels within the chart, knowing that the 15-day EMA and 50-day SMA will be trailing above. And then if direction shifts, I can cut based on where those moving averages are according to my strike rate and risk to reward. But this is a good, pretty overbought, overextended chart that is now turning around. Confirmation in this case would have been a break below the 50-day SMA, at which point I would wait for a candle or two to form below and trade below the 50-day SMA, at which point that would let me know that direction has shifted and I could get in and grab a put and make some money. As you can see, not all charts or very few will present all the criteria that you need to find the perfect setup. There's no such thing as the perfect setup, or you're going to have a hard time finding it. So don't get caught up over finding the perfect setup. Find a chart that checks as many boxes on your list as possible and make the most educated decision that you can, okay? At the end of the day, we're traders. We're not right 100% of the time. You're going to find charts that look great and they end up doing exactly the opposite of what you predicted. That's just how it is. Again, manage your risk. Keep your stops tight and make sure that, you're keeping your losses small. Just to kind of go over what we talked about, we're looking for a spike in volatility within the chart. Okay, overbought, overextended. And it's important to note that it's hard to call the top and the chart can continue to run. That's why it's often good to wait for some sort of confirmation of a reversal before entering, like I showed you here on Apple. Okay, that's why I got in trouble the other day on FSLR. And now looking at FSLR, you can see we are breaking below the 50-day, but as I mentioned, it has not been respected on the chart. So what we really want to see is 2 or 3 candles form below the 15-day EMA for confirmation of a reversal. We can get a fake out, all right? Now, depending on the chart, again, overbought, overextended, it may be making a new all-time high. It may have some space to go to another resistance level. So we can use that information as well on Apple. You know, if we were impatient and we entered before confirmation of a reversal, before a break below the 50-day SMA, we could set our stops somewhere around 179.70, knowing that that is our next level of resistance overhead. Calculate the margin for profit. How much are you going to be down at that point if you're wrong? You know, we couldn't have done that on FSLR back when I was trading it last week because obviously you can see there's no previous high we can use. So again, all charts are different. All charts tell their own stories. Do your best job and make your most educated decision based on what you know. All right, that's going to conclude this setup video. Let's go ahead and move on to the next one. If you've made it this far in the video, I know you want to take trading seriously. So what I want to do is I want to give you a 15% off discount code for my mentorship group. Now, the discount code is right here on screen. So all you have to do is click the link in the description below, head over to my mentorship group website, apply that discount code, and that will give you access to the mentorship group for 15% off. I hope to see you over there, and let's continue on with the free training. All right, so this setup I'm going to be going over, I like to just call a pullback play or pullback setup. There's no fancy word for it, but we'll go over the criteria. So essentially, we're going to be looking for a chart where the pattern overall is bearish, okay? Descending pattern. You can see on CHTR, we've pulled up the live chart right now. I will use some examples of trades that I've taken so far this year inside the mentorship group. But looking at CHTR, you can see we have clear, resistance at the 180-day SMA. Now, when we're looking at charts to find a chart that is suitable for this pullback play, right? We want to see preferably clear rejections or at least candlesticks trading below the 180-day SMA. You can see recently we did break above the 180-day SMA, was not able to hold above, and did pull back. Okay, so that is still confirmation that the 180-day SMA is acting as a resistance level. Now, when it comes to all of these setups, I am looking for at least a 3 to 5% margin for profit. Now, the idea here is we're identifying a chart. Overall direction is bearish. Very clear pattern of lower highs trading below the 180-day SMA, and has formed a low recently on the 4-hour time frame. All my work's done on the 4-hour time frame. You can see we've got a low here at 407.75. Now, what we're looking to do based off the overall pattern, right? The pattern you can see here of very clear lower highs is play the move back down to that low, okay, that low at 407.75. Like I said, rejections at the 180-day SMA aren't necessary to play this pullback play, but they will support an even stronger justification or an even higher expectancy when you do enter. The chances that this trade is going to play out in your favor are more likely if we do see that on the chart. Now, all we're looking to do is play the move back down to that low on the 4-hour, okay? So we can calculate our margin for profit, and we are looking at a 8 to 9% margin for profit down to that low. Let's look at another chart, RIO. Okay, you can see RIO. We got that high at 85.50. Okay, lower highs all the way down to that low formed at 53.33. Okay, 180-day SMA is not being respected. We could see that we can see that candlesticks have moved through this level without hesitation. All right, so we do not have that stronger level of confirmation that this is a valid setup, but we can see that recently we are forming lower highs, okay? Direction did shift as the overall market shifted within the last couple of weeks, But overall, the pattern presented is still this very clear pattern of lower highs where we can assume that, to our best knowledge, Rio will be making a move back down to that low at 53.33. Again, we're not seeing everything I like to see on a chart, so maybe this is a chart that you'd sit back and watch or decide not to play. We're looking at roughly a 10 to 11% margin for profit. It is a choppier chart than I would like to play, and at the end of the day, you know, these moving averages that I trade are not being respected. So I myself would probably sit out on RIO. Now, it's important to note that we could still take this trade, but due to the fact that the moving averages are not respected, we would more than likely want to manage this trade based off of candlestick support and resistance levels. Okay, so if we could see, we ended up getting rejected right here at 62.36. We've got resistance. Okay, another rejection, that is how obviously just basic support and resistance works. And we're not going to be looking at the 50-day, the 15-day, or the 180-day estimate, because you can see that, these candles clearly don't care about these moving averages whatsoever. So we're not going to use them when it comes time to figure out where we're going to cut this trade for a loss, and obviously taking profit down at that low. Now, I'm going to pull up a couple trades I've taken so far inside the mentorship group that perfectly represent this pullback play. Now, if it's not clear already, this is obviously a setup to trade when the market is bearish because we are buying puts, right? We're playing the downside on this pattern that we're locating. And these charts that present patterns and the setup that we're looking for will be more common when it is a bear market. Here's a great example of a pullback play. So ticker symbol WHR. Took this back in February, okay? I did quite a bit of charting here, a little analysis. You could see high formed at 245.44. Right away, we could see these moving averages are not being respected whatsoever. So overall direction since that high formed at 245 is bearish. Okay, we've seen a clear pattern of lower highs, and just charting out a basic, trend line, we can see we've been making this very consistent pattern of lower highs. Now, we pull back to 193.47 where we formed a low. We broke through that support level, all right? Very clear lower highs, as I noted. What I am looking to do on this chart is play the rejection. You can see where we're trading right here, the rejection off of that trend line. And that trend line was located by pretty much just lining up the tops where we were rejected. Even if we do break through, I'm not a fan of trend lines. It's a good way to give you a visual representation of a pattern, but there's no formula behind it. We know, though, that there is going to be resistance at 207.54. So when I go to enter this trade, I'm not going to be cutting it, obviously, if we break above this little trend line. I just use this more of an example so people can understand there's a clear pattern there being formed. But I would be doing my calculations when it comes to risk to reward and where I'm going to cut for a loss at the level of 207.54. So I entered right here, and I was looking to play the move back down to 193.47. Okay, pull back to that low on the 4-hour, which is the pullback play. And there was a 5 to 6% margin for profit presented. And you can see, a break above roughly 207.54 is where I was looking to cut this if we did get a rally and break that pattern of lower highs. And just a couple days later, I closed that trade for just about 53% profit. Okay, I wish I had a screenshot. Now, I should do that from now on. When I close the trade, I will put a screenshot of where the chart is at because I'd love to have shown you right now, but obviously don't have the screenshot there. And it's just going to be very confusing and the chart's going to be skewed if I pull up a live chart and try to scroll back. But we did play that move back down to that low, and that was a great trade. Obviously, 50% plus profit is an amazing trade. All right, on to the next example of a pullback play. You can see ticker symbol UBER, Uber. Right, we all know Uber. I identified that very clear pattern of lower highs, overall descending pattern. Right, chart is bearish. It's going from the top left to the bottom right. If it was bullish, it would be going from the bottom left to the top right. All All right, as you can see, we recently pulled back, finding support and making a new low at 2016. All right, so you can see that low is formed, and I am just looking to play the move from where we're currently trading back down to that low. Okay, very clear pattern. Can't use the moving averages there. Well, we could, but just know that the less effect they're going to have is either a support or resistance level. So we could still, use the 180-day SMA as a level of resistance. Okay, you can see right there, we did get rejected at the 180-day SMA. So it might be acting as a bit of resistance, but overall we can see it really hasn't, right? At the end of the day, there's no exact formula you can follow. You just have to use your best judgment based off of what you know. Now, the more charts you look at, the longer you trade, you'll just get better at doing this. So in this case, I was looking to play the rejection off the 180-day SMA, okay, because I did see that we did get rejected right there. Now, I don't want to seem like I'm contradicting myself. I did end up managing this trade based off of the 180-day SMA. You look at the bigger picture, obviously, the moving averages aren't being respected, but on the shorter term, or the, looking a little more in depth, okay, the smaller picture, however you want to put it, you can see we did get rejected right there at the 180-day SMA. So the immediate pattern, okay, the immediate previous move I'm using to base this current play off of. Again, it's just chart knowledge. It's spending hours and hours and hours looking at charts and seeing how candles react to these averages, always being aware of the overall market at the current time. Maybe the overall market was at a level where I was confident in a rejection. There's a lot that goes into this. So we always, again, want to look at the bigger picture, but I was just looking to play the move back down to 2016. All right, there was a 10 to 12% margin for profit presented. Stops were around 2% to the upside, which was right around where the 180-day SMA was at time of entry. Ended up closing that play for 46% profit. Okay, so that is going to be my last example of a pullback play. Now, I'd say these are pretty easy setups to find right now due to the overall market. Again, it is hard to find a chart where the pattern is clear, the chart is clean, moving averages are respected, there's clear and very accurate levels to play off of when it comes to support and resistance. So the more things you can check off your box when it comes to the rules to finding a setup, the better, and the higher expectancy or the higher chance of that trade playing out in your favor is. So keep that in mind. You can play a chart that looks like Rio, but know that the chances of that trade actually playing out as you predicted are less due to the fact that you can only check off a couple boxes on that checklist. All right, let's move on to the next setup. So in this video, I want to cover the 3 setups and their correlating checklists so you guys essentially know what to look for before placing a trade, okay? Now, I have linked all of these setup checklists below. If you want to download the PDFs, you can take these and use the actual boxes, check them off as you go. But I want to premise this by saying you do not need all of the boxes to be checked to take one of these trades. However, the more boxes we can have checked, the better. So you'll see under each setup checklist, I've got both the entry criteria that we're going to look for and the trade management, because based off the setup, we're going to be looking for different things upon the entry. And when it comes to, how we actually go about managing that trade, we're going to manage that trade specifically based off the setup in different ways. Okay. So to start off, we want to look at the ATH pullback setup. If you guys want to pull up this PDF or just watch this video and do that after, that's fine. So as far as entry criteria, we're looking for the overall trend to be bullish. Okay, we're looking for the chart to be sitting at or slightly below its all-time high. And preferably, we'd like to see that the all-time high was just formed. Okay, we want to see that the 15-day EMA is currently respected, and we want to see that the 50-day SMA is currently respected. Preferably, like I said, all of these boxes will be checked off, and the more boxes we could check off, I would say the more confirmation, the more confirmation it is that that trade will actually play out in our favor, right? Now, as far as the trade management, we want to, with this specific ATH pullback setup, we want to either play a break below the 15 and short to the 50, okay? So break below the 15-day EMA, short to the 50. We want to short off the all-time high down to the 15. We want to short off the all-time high down to the 50. Or we want to play a break below the 15 and 50 and short to support. So if we're setting up at an all-time high and the 15-day is respected, well, we'll short down to the 15. But if the 15-day isn't respected and the 50 is respected, well, we'll short down to the 50. So you have to look at whether the moving averages are respected or not. With trade management, we're not trying to check off all of these because these are opposing. So it will be one of these boxes will be checked, right? So out of these 4 ways to manage the ATH pullback, you're going to choose one of these 4 ways, and that will be based off of, well, what the chart actually looks like, okay, where that stock is sitting, and what moving averages are being respected or not. Okay, all the charts are going to tell different stories, so just know that one of these 4 trade management is this going to be the criteria to manage this trade. Okay, one of these 4. Okay, all right, moving on. The ATL bounce. Our entry criteria overall trend is bearish. All-time low just formed or previously formed. Okay, 180-day SMA currently respected. 50-day SMA currently respected. 15-day EMA currently respected. Now it will be hard to find a chart where all of the 3 moving averages we use are respected. However, like I said, the more moving averages are respected, the better. Okay, so this setup's a little more straightforward because we're just looking to play a move off of that all-time low on a chart. And as far as the trade management goes, right, we can see playing the move off that all-time low. We're either going to go long off the all-time low up to the 15-day. Okay, if the 15-day is respected, we'll play up to that. Long off the all-time low up to the 50-day, or long off that all-time low up to a resistance level. Pretty straightforward. Next, the pullback play, one of my favorite setups personally. Entry criteria. Overall trend is bearish. All-time low just formed or previously. Pattern of lower highs. Okay. Pattern of lower lows, or I read that backwards, but lower lows, lower highs. We want to see both being played out on that chart. 180-day SMA respected currently. 50-day SMA currently respected. 15-day EMA currently respected. Pretty straightforward setup. You know, overall trend is bearish. We just saw that an all-time low was just formed or previously. We're essentially just going to play that move and short down to that all-time low. And we want to see these moving averages being respected. All right, so those are the 3 setup checklists and what you should be looking for as far as entry criteria and how you're going to go about managing each trade, okay, based off of whatever setup you are actually trading. Hope that helps. Download the PDFs below. Thank you guys for watching this video. Don't forget to subscribe. I'm actually posting daily on the YouTube channel here, so you can tune in every single day. You can see how my trading and progress is going. Smash a like if you did take away any value. And again, the link is in the description below to my mentorship group.